At the start of August, the Russian government banned all exports of wheat until the end of the year. The price, already at a 2-year high, jumped 8% in one day. But news the ban was being extended to the end of 2011 sparked a much smaller rise, as much of the market had expected a prolonged export freeze by Russia.
It added fuel to the fire that was already taking place in the grain market, caused in large part by the fact that Russia has been experiencing significant drought along with other parts of Central and Eastern Europe and indeed climatic conditions elsewhere in the world. And it's also created a situation where one of the cheapest sources of grain available to the world market has been suspended.
Russia stands to lose around $15 billion, or 1% of its GDP, from grain losses this year, with its export share falling from 15% to just 2.5%. Exporters in the US and Europe are rushing to fill the gap, but at a price to the buyer.
The cost of wheat out of the US might be exactly the same as it is out of France or Russia, but the cost of freight to get it to, say, Egypt is significantly more out of the US than what it is out of Europe or Black Sea.
Egypt is scrabbling to find replacement supplies. As the world's largest importer of wheat, the country traditionally buys a third of its needs from Russia. Other countries in North Africa and the Middle East, which imports half its food, have also been hit hard by the Russian ban. This is milling wheat, destined to make bread. The global demand for wheat is at record levels, an estimated 665 million tonnes in 2010-11. But the global wheat crop will only be around 646 million tonnes, which means wheat is trading at a premium. Based on the Chicago futures market, wheat is $100 a tonne more expensive than maize, up from a $30 a tonne premium at the start of the summer season. So will the bread this wheat makes be selling at a premium too?
Wheat is only a small part of the bread price. If changes in wheat price only reflect partly in what happens in the bread price, and quite often in a lagged basis.
Although the UN food inflation figure is lower than it was 2 years ago, the index spiked in August to its highest level in that period, mainly due to the Russian wheat ban. But in that time, global stocks of wheat have risen to 197 million tonnes from 121 million, buoyed by bumper crops.
The last 2 years, we've had pretty much idyllic weather throughout the world, and we haven't really had these sort of production setbacks, but certainly this year is more back to what we were sort of seeing 2007 when we had production issues in a number of regions.
2 years ago, those production issues sparked food riots as the cost of food soared in response to higher raw material prices.
Clearly there are likely to be some concerns about the future. The bigger risk is not so much about the long-term availability of products, but the fact that markets are likely to be much more volatile in future.
So what kind of profit are farmers in the West making? Tapp says most of his clients have done well, at least in the short term.
Probably the majority, they will now have sold a reasonable proportion of their crop into this market at prices 20, 30, 40, 50 pounds more than they had anticipated or more than they had budgeted, and they will do well. The downside is that following on from wheat price spikes, you tend to have movement in fertiliser prices, and we're already seeing quoted prices ex the Black Sea going up quite sharply.
Meanwhile, farmers like UK wheat grower Mike Barker are keeping a wary eye on the market.
I track it daily, sometimes 3-4 times a day. Get the times, they always list it daily in the paper, but I do go online and follow it.
With the wheat price so high, Barker is waiting to get the last of his harvest in the barn before striking a price, as any shortfall in his estimated crop would be cripplingly expensive to fill. He has already sold half his wheat harvest, if not for top dollar, then for a decent profit. But the high wheat prices are not good news for all farmers.
Animal feed prices undoubtedly will rise as a consequence of the current grain price. It's difficult to say by how much, because equally other grains are used for animal feed, like maize, like soya, which are not experiencing the current spike.
So, to meet demand, producers must increase yields, and that is a huge challenge.
Yields have been stagnating in the course of the last 10 years. So whereas in the 1970s and 80s we saw something like a 4% average annual growth in grain yields, that declined in the late 1980s and 1990s to less than 1%. And unless we see renewed investment in research and development to improve productivity in grains and indeed in animals, then I think there are likely to be difficulties in meeting the requirements to feed the world in future.
With the global population set to top 9 billion people by 2050, the pressure is on. The UN's Food and Agriculture Organization forecasts total world demand for agricultural products will jump 60% between now and 2030. Feeding the world is only going to get harder.